How's it going, everybody? Welcome back to another stock market update. Just going to be chatting a little bit about the technicals. We're taking a look at the SPY right now. It's kind of doing a little bit what we anticipated. We kind of expected a little bit of, I thought it'd be a bounce at this, but we kind of broke down. We're actually fighting for the second week on the other side of this trend line, which is kind of surprising. Actually, not really surprising. This reaction, though, at like 390, I don't know why that was so significant, but actually this is, hold on, let's go line at about 390. Look at this, the interactions. We had like a week, we had 4 weeks here, like 4 or 5 weeks below. Now we're back above, and that was a support area on a weekly time frame. Actually, look at this volume too. Volume into the decline was actually increasing, so that like 9% drop about that increasing volume. Then we had the bounce week, and had a lot less volume, and had actually less volume, a little bit more volume than the first bad week over here. Kind of fascinating. I still think the market's pretty weak. I mean, some things like Logitech actually dropped pretty low. We hit like 46 or something. I was buying a little bit there. My average price now is like 41.50. Able to get it lower, but I still think the overall market's gonna drop a little bit. So I don't want to get too into the. I want to keep cash. Is what I'm trying to say. Even look at this volume. The last 4 weeks, a lot of decent. Can you guys see this? Is kind of small. Pretty not big volume. Like we had a lot of buying here, but into the decline, decent volume in this last week. It just wasn't. I mean, surely Logitech moved like 6%, but at the same time, not a lot of volume. Let's go to the Qs. The Qs are still pretty far below here. We bounced like 275, 280, my bad. DIA, the Dow. I don't know. We're fighting below this line. Let's go back to the SPY. I'm just trying to figure out where we are in the market. I haven't been doing too much analysis, but I think if I look at this chart, I'm saying I think we gotta go back to this line and at least retest it. There's actually, why is down here my buy? Down here's my, okay, I'm in like everything. I'm selling every Pokemon card I have and getting it. No, I'm kidding. But I think, from where we are now, a 15% drop is highly likely. I think, maybe it coincides with like 350, maybe even 375, like over the next, let's say, year. I can not hope, but I think it'd be kind of nice if we see like a larger decline, so at least I can pick up a lot of stuff. Like, I was actually gonna buy JP Morgan like last week or 2 weeks ago. Big time frames, I really want to get at this trend line, but that's gonna fall like 20 more percent roughly, depending on how you want to look at it, but that trend line seems super good. I think since our last video, I think I bought more 3M. This thing tanked off of some pretty bad news, some of the lawsuits and stuff. Actually, I think we were discussing that. Was it that long ago? I made a video. Oh my gosh, wait a minute. No, it can't be. Maybe. But anyway, this thing dropped, so I was picking up shares. But I averaged down like $5 a share, so I'm at 150 now. So I mean, I'm still down. I'm actually down like 20%. Wait. I'm down like 20% at 3M. What the heck? Let me see this. I'm not gonna move the screen really quick. 18%. Wow. Yeah, this thing collapsed. The yield right now is like something 4.5% or something, but they got issues. They got a lot of debt, and they're not expecting that they grow that much. I know there was problems with it, but I decided to add a little bit to average down. I don't think it's the worst stock right now. I think it's okay, but at these levels, it's getting super cheap actually. I'm looking at my other screen really quick. I just want to see one quick thing. There. Oh, I messed up. Wait, what? What's this? I think their PE though was like super cheap. Let's see what this says right now. This is saying their PE is 17. Why is it? Oh, so their TTM PE, right? It's kind of high because especially this year with all those lawsuits, they're expecting probably to generate a lot less money, so their PE is going to be a lot worse, I guess. But from like a 3, 4 year, 5 year PE perspective, they're actually pretty cheap, like below 10 PE, I'm pretty sure. Again, it depends on what metrics you want to look in the time frame, the yada yada yada, but yeah, it depends. For me, the price to the market, or the price of the stock at these levels relative to the earnings is super spicy. We're actually back to the COVID lows, about like 115, actually it's at 123. If this does hit 100 though, that's like way too cheap, but that's still another 20% drop. I think the 120s and below is fine for me. The valuation model that I threw on this thing, actually, yeah, what is going on? For some reason my entire sheet's all messed up, so I don't know what happened. Anyway, I'll go back to looking at this. Let's stop talking about 3M because the things that are happening, I guess, is a little bit, it requires more than just like 4 seconds of conversation, I guess. Intel, I never thought, but I didn't think I would actually hit my goal of the amount of shares I wanted for this year, because it was pretty ambitious, but I hit it, and that's really only due to the stock dropping by like 35-40% from where I was initially aiming to buy. So because it dropped so much, I hit my share goal count for the year. Pretty cool. It also hit the low of 30, or hit a low psychological level of 30. I can't believe we got this cheap. PE ratio of dividend yield of almost 4%. They just increased it. The PE ratio is like 6, 7. Sure, the earnings actually might go down, so that PE might be like 9, 10 actually, like it might be not as high. But again, I'm looking at 2025 beyond, and again, it stinks because looking at that PE now, it's heavy. That's a lot of money that I lost. My net worth, I guess, is down, but technically I didn't lose because I didn't sell. But the ability to pick up the shares lower now is just very appetizing. And I mean, this fell 30% from a huge support zone. $30, I think yeah, it's like, when do you stop buying? And it's like, I don't know. Like, I don't want to get overconfident because the portfolio is already, like, my purchase price of all these things, this stock, actually, I'm down, what is this, like, 30%. So, like, my amount of money I put into this is insane compared to other stocks, and that in itself is a little bit like leveragey almost, even though the percentage I'm keeping consistent, the decrease in this is a lot. So I do want to buy more other assets, but like it's just so cheap, and like, I don't know, guys, like, I don't know. They got one more quarter, then they might increase the dividend a little bit. Again, I don't really care if they do per se. I just really want to make sure that they're using the capex wisely with making those good investments. But I mean, again, they're risky. I can't dive that deeply into whether their investment in, let's say, Arizona is going to pay off in X years. I don't have that type of knowledge and investment, knowledge. I just gotta have a little bit of faith, and yeah, but it's tricky. I think this might be a great play, but the cheaper this stock gets, the higher probability that I guess I will see a nice return on my money. Up here it was a little iffy. Down here it's even better. So even if this drops to like $25, it's just gonna keep on getting, I guess, better in a sense, because again, the market's pretty fearful. That's a huge breakdown too from that pattern. That actually looks like Verizon too, just breaking down. Verizon, 40, but yeah, my average price is 51. I don't love it, but again, the cheaper this thing gets, the better. It's got problems and stuff. I'm gonna go back to Intel really quick. Yeah, I think I said $30, if Intel hits, I'm gonna be making a sizable purchase. It hit the $30. I added until I hit my goal for the year. Now we'll see what happens. I'll add here and there, but 25, I'll probably do another big purchase. If this stock hits $0 and I lose all my money, well, that's the worst that can happen. Best case scenario is this thing continues to drop and I pick it up and then it rips up after X amount of time. So we'll see what happens. Again, everything's a risk. just because the stock is dropping doesn't necessarily mean that it's a bad stock or a bad company. Again, the stock price is not reflective of how the company is behaving or its future the prospects of the future. It's just the market's reaction, either the bots or the people trading the stock in the company, how they perceive it. And typically, depends how you want to view the market. It's always right or it's always wrong. But yeah, you gotta find value, and you gotta figure out how to pay for it. Google did hit 105. That's my buy price, or I kind of 100, but 105 right now is the buy. I still hope this falls a good amount, but we'll see. Average price is 111. Foot Locker's kind of ripping up again. This is a stock I wish I put in a lot more money because it was getting too cheap. It's like the same thing with like Intel too. Like, it's so this thing dropped like 60%. Then all of a sudden it rips up like 50%. Like, I mean, I'm not saying it's the right move to add down in a stock like this. Like, it's not 1-to-1 to Intel. But what I'm saying is, eventually, the market's wrong, because the market ebbs and flows in these swings and things, you know. And if it goes too low, it doesn't matter if you like the company or not, because there's a difference between liking the company and liking the stock. I'm not really sure I like Foot Locker, but I like the stock at these levels. Like, oh, it's so cheap. Like, what the heck? Then if it goes up to here, maybe I'll get rid of it. I don't know. But just seeing those opportunities, it's, again, maybe I'm wrong. But it's just a strategy and how I'm trying to figure out, you know, to do a CCJ. The uranium stuff is popping off. Since, again, I've been buying every time it hits this trend line, I pretty much buy. So, I mean, actually, so the last 3 weeks, up like 35%. 17, I've been adding here and there, but I'm at 17 something right now, so we're up like 70%. Holy, no way. We're up 72% uranium, or CCJ. I actually sold half the position of quadruple U last week, or earlier last week. I was getting nervous with the market, like, let's go back, like, I was looking at this, and I'm like, yeah, that looks like it wants to bounce here and go down, so I think we go down from here. If it does that, I think the market's just still gonna fall. Wanted to lock in some profit, because, what am I up? 40%, I think it was, yeah, actually it was 40%, so it's like, it's a lot of money. It's not like life-changing money, it's still like a pretty small position, again, relative to everything else. It was, what percent, I don't know the percentage, small percentage of the portfolio, but it's still like, okay, if I sell this amount of shares right now, I'm actually making that much money, so it's like, okay, I probably should sell some, raise that cash, get that or not P&L, but lock in that profit per se. I still kept half the position in case it rides up, but hoping we come back down to $6 or $5 again. That's when I start re-adding. And again, it might not seem like a lot, but that's 20-35% down. I'd rather try and lock in some profits here and there. But look, we keep having these, so fascinating, these like, up, down. This is such a good, like, picture of, what's the word I'm looking, or like the phrase I'm looking for, like, the market, oh my gosh, like, riding the wave per se, like, market's gonna have, or like a stock is gonna have its explosive period, everyone's looking at, everyone's hyped, everyone's, buying or selling, then it kind of cools off because it has to, like, it can't go up and speedy and all these, not speedy, if I could use my words, it can't be, excited all the time, it's gotta cool off for a little bit, it cools off, decline in the volume, boom, spikes back up because something triggers the catalyst, then boom, cools off, spikes up again, cools off, spikes up again. So here we might get another spike or two, ride it up, then we'll cool off. So yeah, again, not every stock does that, but in general, I mean, typically that's how some markets behave. Just some, it depends on the time period and not time period, but more like the time frame per se of the stock. But yeah, with a like quadruple U, it's pretty noticeable. Smith & Wesson's getting hammered. Super sad. Let's see what Exxon's doing. Nothing really bouncing at like 95, holding at it actually. I need to do more DD on Exxon, but I'm definitely expecting them to increase their dividend. My guess is like 90 cents, maybe a little bit more. Exxon, kind of spicy. Sorry, I think I might have reset the same thing like 2 times, but I'll try to edit it out. We had a lot of disruptions with a bunch of noise, but it wanted to say something about the Exxon's dividend. Stag actually dropped to $30 again. That's my buy price. I think the market's just giving me better stuff. Like, I want Stag, but I don't want it that badly. There's just other things that I'd rather buy at the current levels, you know. Same thing Clorox. I think it's better down here. The market likes this stock, and I don't understand. Dividend yield is 3.3. They got a lot of debt. The PE ratio is 38. Again, we gotta look at the longer term. Actually, I'm looking at my other stuff too. I mean, I would like to show you guys, but there's just I got a lot of stuff open. Yeah, what happened to all my stuff? What's going on? What is going on? Google Finance L3. Oh no, all my stuff got messed up. Our Google Sheets is all messed up. Okay, so it doesn't even matter. What's gold doing? Gold is so disappointing. Like, I'm so sad I put so much money in it. But it's like it got cheaper. That reminds me, I did sell AG. I sold the AG because I wanted to raise some cash, and I have other gold miners. I got NEM, I got WPM, and I got Pan American Silver. AG was my like, okay, let's ride the wave going up, and like, again, maybe I'm selling at a bad time. That reminds me of KGC. Like, KGC, we're at this super low, like, crazy. But like, now would be the time to buy, so it's like, why'd I sell stuff like this? Like, I think KGC, I did sell like $3-4, and I, had less. I had a 30% drop, and I sold that. And it's like, now's the time to buy, but why'd I sell it? Because I want to put the money into actually other stuff. Sure, the loss stinks, but it's like, it can keep going down. I mean, it has probably a higher probability of going up, but because probably someone's gonna ask Bed Bath and Body Works. It's like a tongue twister. This thing is trying to be the next GameStop. Crazy, but like, again, it's just hype. It's hard to time. It's hard to get in. I don't understand it, so I try to stay away from things that I don't really understand. And that is one of them. Dropbox. I'm kind of just scanning around for some. Actually, what's NEM doing? NEM should bounce here. Like, look at this. Look at that trend line. Like, it didn't bounce. Monthly candle, it failed. Even so, yeah, monthly candle failed. Obviously, yeah, then this weekly candle, it extra failed here. Crazy. It's just very surprising. Like, where is this gonna bounce? Like, look at that drop. That's like a 50% drop in like a month and a half, maybe. Jeez, like, that's insane. And like, there's no bouncing, it's just plummeting. Like, look at that plummet. That's a 2-month period, 35% loss. Not a single week where it was like, okay, it's just like gapping down. Very little buying, very fascinating price movement. I kind of wanted to get into BJ's. It's kind of like Costco, but it's more locally to where I am. But yeah, we're getting like, yeah, so it's so weird. Like, I should be interested in gold and silver at these points, but I already lost a pretty good amount of money, and I kind of want to, I guess, I'm not making, how do I want to say this? I don't want to be like trading these things and like, this is a very weird psychological like discussion I'm thinking about right now. Like, this got so cheap so fast, like we're literally down 50%. The price of silver and gold, sure, silver's fallen a good amount, but gold is back to the 1700 zone. Sure, like 1900, like these margins get a lot better when we're up here, but like down here is like, so yeah, we're at this bouncing zone. We've been here since 2020. After COVID, we probably bounce here. Maybe we fall down the right, so it was a possibility, but if I looked at this chart and I said, okay, probably if I had to make a bet right now, like my life was on the line, I'd say it goes up. So if I think it goes up though, why would I not be buying these assets, especially like I cut in half in the last like month or 2 or 3 from from a trading point of view, this makes sense. Like, get into these assets that are getting absolutely obliterated, like Exodia obliterate. Like, that just makes sense, to be honest. But it's like, I don't want it. And that's where, like, the human psychology factor, I feel like, comes in. It's like, this asset just got so, like, valuable from a stock point of view, especially Pan American Silver. I liked it up here, even, like, down here. Now we're all the way down here, basically 30-40% down. We're at, like, the low of 2004 over here, like, during low of COVID. Like, now's the time to buy it. If this thing does rip up, like, again, buying low of COVID up to here, 150% about. Again, it might not do that. But even if it rips up to here, 35-40%, that's actually crazy. Like, we don't need 100% of movement to, make good money. But, like, I don't want it. And that's the weird thing. Like, I'd rather, and I guess for me, personally, I can't value this. It's very hard to value. But Logitech, I feel like I can more easily value and put a price in the future. And because I'm not at the computer all day, I don't really want to be trading. So that is why I don't want to overexpose the portfolio or, what is this? Buy Newmont for its attractive dividend. I mean, yeah, the dividend right now is what, like, almost 4%. Actually, I think it's more than that. Maybe we just do the math. 0.55 times 4. Divide that by, it's $43 about 5%. That's crazy. And again, they might not be pumping that kind of money out, but if they are, in this stock, I hate myself right now. I think I need to buy this. Like, I'm getting not mad at myself, but like, I'm trying to find reasons why I shouldn't buy this, and the only reason I can find is I don't want it. But that's not a good reason. Same thing like Pan American. I think their dividend's a little bit different, but I mean, again, just because they pay a dividend doesn't mean it's always going to be around. 100% agree, 100%. But like, they're generating good free cash flow, and the gold price isn't that low. I think people are anticipating it to drop even further, which it can. But again, given like everything going on, like, am I really expecting the gold price to fall back? Like, if the gold price falls to 1,500, 1,600, that would be really bad. Even though it's only a 5% drop, I think even 1,600 is okay. But once we hit this like 1,500, 1,400, that gets pretty bad for the margins. So, man, I'm just thinking, like, I didn't think this would be this intense of a conversation. I need to relook at NEM's thing right now. Not right now, but Newmont quarterly report. I need to see what's going on, like what they predict if the gold price is gonna be and stuff. Or not the gold price, but like, I don't know. I need to read this. We can do a video about that too. I don't know if anyone really cares about the gold stuff that much, but it's like, from this level back up to like here, even like that's 50%. That's a huge move. We're already at this pretty big channel. I think, where's COVID? I rode this like up to here, something like that. Very fun ride, or made a good amount of money, but like, I think this got way too cheap. Like, $40 is way too cheap. Can they sustain a dividend? If they can, this is actually ridiculous. If they can't, they declared the second quarter dividend. Hold on, I'll bring this over here. Let me put it on the screen so you guys can see. No, declare dividend, blah 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 blah. Declare dividend, okay. That was not what I wanted. Never mind. Let's go back. We can take a look at this further. Oh, I just clicked on that one. I just clicked that one again. Second quarter results. I gotta go through this because this could be insane. Free cash flow results are really more fun. Okay, so solid second quarter production, free cash. So despite this July 25th, I mean that's 2 months ago. They're looking to when's their next earnings date? Like a month from now, month and a half. Let me go want to just see their their cash flow. Free cash flow Q1 to 514 million. So, I mean, okay, the last 3 quarters they're making 5, 6, about 7, 8, 8.5, 9, 10, 11, 12, 13, 1.3 million. So let's say 15 million free, or sorry, 1.5 billion free. Wait, that is not right. What's their market cap size? What is their market cap size? 34 billion. So they're making about, let's just say about 35. I did that wrong, by about 35 billion divided by 1.5 billion. Market cap, the free cash was 23. Okay, so that seems not high, but I mean, we want this number to be low. Low is like 10, 15. 35 is a little high, so they're not making it that much. I mean, again, all their projects, all this other stuff. I gotta dive into this separately, but let's go down to just their cash flow. Okay, let's see. Here we go. Cash flow statement. What am I looking for again here? 1.1 billion. Can we get 6 month end? Let's do 6 month end. 1.7. So compared to last year 6 month end, 1.8. They're on basically track for that. So I mean, where are we going? 1.7, and then they're paying out 873. So I mean, just real quick math. Like again, this is not too intense. About a 51% payout ratio. I need to see their shares because they can raise money that way. I want to make sure they're not cheating. Where are you? There you are. Net income. Shares. They actually bought back shares. Their EPS though for the year is a lot less. But again, that could be attributed to many different things. They actually made more money in sales, but converting that to actual money was a lot different. This is a big number difference here. This is a big number. Taxes. Or no, yeah, mining tax. Okay. Again, there's a lot to look at. I think I'm being dumb here if I don't buy some of this. Again, I'm not saying you should buy it. I'm just saying do more research because this is where opportunities present themselves when things get cut in half and, you know, I don't know. I feel like I gotta end this video on a awesome note. I want to buy more Snap-on. It's not getting cheaper, guys. Come on, they're about to increase the dividend again, so hopefully this thing falls so I can buy some. The market's getting cheap. It could get a lot cheaper. There's definitely opportunities out there, so I mean, again, if you're willing to have a little bit longer time horizon and take on some risk, I think there's a lot of opportunities and you can make some pretty good money. Again, it's not without the risk, but yeah, they're out there. Thanks for watching, everybody. Hope you enjoyed the video. Take care. I'll see you next time. See you later.